I go to bed often, praying that we don't go to a cashless society, because I think it's probably, it's clearly a move by governments to get more control over the population and more control over our lives.
Every gold investor should consider top quality assets partnered with the best in the business, a real portfolio to profit. Gold year to date is up 22%. However, a portfolio that is positioned correctly should be up 155% this year. To learn more about how you can begin to enjoy the bull market in gold, visit futuremoneytrends.com/fortune.
Hello everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and today we're going to be talking about the stock market, the overvalued stock market at that. And to discuss this with me, I got Dave Kranzler on the line. He's with investmentresearchdynamics.com, and at the website there, he's got two special journals that you can sign up for. One is the Short Sellers Journal, which is a weekly publication, and the other one is a bi-weekly publication, which is the Mining Stocks Journal. And we're going to be discussing, a few areas of the market here, and I'd like to jump right in. Dave Kranzler, thanks for joining me.
Thanks for having me, Kenneth. It's good to be back on your show.
Well, hey, I like experts coming on the line here and just kind of giving us a feel for what is going on out there in the market. And in one of your previous articles here, kind of the last two articles, you've discussed our current stock market being the most overvalued in stock market history. That's a pretty substantial statement right there, Dave. And if you would, please elaborate on this.
Sure, no problem. First, I'd just like to say I don't know if I'd necessarily call myself an expert. I've been in the stock market. I've been doing it for over 30 years, but over that period of time, I've been probably humbled as much, if not more, than just about anyone else in terms of trying to figure out what makes it tick and whether you should be buying it or shorting it. So.
Sure.
My current view, and again, I want to say this with the backdrop that at any given time the Federal Reserve could come in here and start printing money like crazy again. Sometimes I liken what could go on to what happened during the Weimar period in Germany when the central bank there just started going into hyper printing, and that's probably the most overvalued stock market in all of history. So to the extent that you sell stocks or you short the stock market here, there's always that risk.
Sure.
And which of course would then just make the stock market even more overvalued. But at this point, and on my blog post I use a graph of the Shiller PE ratio, which kind of it's a smoothed out moving average, if you will, of the past 10 years corporate earnings. And if you look there, currently, based on just the Shiller PE ratio, this is the third most expensive stock market in history. The most expensive being 2000, and then after that 1929. Yeah. Now there's a problem with doing a time series comparison of PE ratios, and it doesn't matter if you just use the outright PE ratio or the Shiller ratio, whatever you want to use, and that's because the GAAP accounting standards have changed over time, and the nature of those changes has always been to make it easier for companies to produce non-cash earnings. Call them GAAP, generally accepted accounting principle earnings. And so every time the FASB issues a change to the GAAP accounting standards, it has the effect of allowing corporations on an apples to apples basis to report higher earnings than they were reporting before the effect went, before the change went into effect.
Mm.
So, examples over time have been stretching out depreciation tables on hard assets. The way that companies account for their pension funds, that's been liberalized over time, and it allows companies to, again, increase their non-cash earnings. Probably the most glaring one that I've seen recently was the one that I talked about in the blog post, and that was they let banks and financial companies who have bond holdings, they let them move their bond holdings into a hold to maturity account, and if you move your bonds into a hold to maturity account, you can mark the bonds at par. So it doesn't matter where they're marked. If your intent is to hold them to maturity, you can mark them up to par. Well, what that did was it created a non-cash gain from marking up the value of the bond. Mm. And Wall Street banks were taking huge advantage of that right after the financial crisis. It was the effect went into 2010, the change, and I think we started seeing it either in late 2010 or early 2011 in the earnings. And it allowed the banks, and they're a big portion of the S&P 500, allowed the banks to really expand their accounting earnings, but not necessarily expand their cash flow. In fact, they were still operating at cash flow deficits. I haven't looked at the banks in a while because it's just all so corrupt. And the banks, over time, they've made it easier for the banks to move everything off balance sheet and hide it, even though that was, the Dodd-Frank legislation was supposed to do just the opposite of that. It in effect made it easier for banks to hide everything. So
Dave,
essentially what you've got now is if you were to say apply 2000, the accounting standards that were used in the year 2000 to the S&P 500, and apply those to the current earnings of the S&P 500 companies, I would suggest that you'd probably at least cut those earnings in half.
Wow.
In which case, the PE ratio that's shown on this Shiller PE ratio chart would double, and that would, it would most likely, on this basis, make the current Shiller PE ratio the highest in history.
Well, Dave, I guess to be a pundit then, one of the things that the stock market has going for it is ultra low interest rates, really an environment that the market has never seen. And that's really pushing people into stocks, because where else are they going to get a yield on their money? And it's really difficult to value the stock market with interest rates where they are. I mean, what would you say to that?
The interest rate argument is actually a great point. However, to the extent that the stock market is a forward-looking discounting mechanism, and again, with all the central bank intervention in all the markets globally, not just here, I think it's somewhat removed, if not completely removed, the true price discovery mechanism that the stock market is supposed to be. However, you've had about a 50-year, more than that, you've had a 56-year, is it 50? No, I'm sorry, my math is off. You've had a 36-year, from 1980 until now, you've had a 36-year bull market in the bond market. Mm. Which means that you basically, I guess you could call it a bear market in interest rates, because interest rates have gone low. So interest rates reached an all-time low last year. And now the law of probability says, granted, interest rates could go sideways for a while, but the law of probability says at some point interest rates are going to start heading up higher, and we can, there's a dozen fundamental reasons why that could be the case. However, that would also suggest to me that the interest rate effect, the effect that lower interest rates would have on valuing stocks, has already been discounted into the stock market. Okay, and those effects would be like, companies have high interest rate debt, and they go out and they refinance it with lower interest rate debt. So they cut their interest rate expense. and that would be one of the effects that would cause earnings to increase. As an example of how lower interest rates help earnings. Well, interest rates really can't go much lower from here. So that component of what's driven the stock market is largely behind us.
Well, Dave, and again, this is something else that, a pundit would say, and I'd like to get your thoughts on it with your history here trading stocks and being in the markets. And that is, buying stock or the market or buying a trend after it hits a 12-month high. And that's interesting because, in so many situations, after a trend goes and gets to its 12-month high, it continues in that direction with some momentum. And many are saying this is what's going to continue to keep the markets going. And, the reverse is true. Buying a stock or, a trend, when it hits a 12-month low, it tends to continue in that direction for a number of years. Any thoughts?
Yeah, I mean, it's like a game of musical chairs, though. I mean, when you're at a point where the market on a fundamental basis is overvalued, and, if you want to just throw out my GAAP accounting argument on earnings and just forget it, then still outright, this is the third most highly valued stock market in history. When you're talking about, moving the stock market higher, or the trend analysis that you just, talked about, there you're talking about it's just cash creating momentum and chasing stocks. Yeah. And you're sitting there waiting. It's the greater fool theory kicks in, and you're waiting for the greater fool to come along and pay you a higher price for what you just bought. And that's kind of the dynamic that kicks in. But I've always thought, and this goes back to when I studied these issues in finance at the University of Chicago in 1990. I've always felt that, over the short run, technicals definitely can take over a market, but over the long run, fundamentals ultimately cause some type of mean reversion, whether it's a mean reversion higher, if the stock market's had a crash and a long period of being depressed, and all of a sudden fundamentals are starting to turn around, or a mean reversion lower if you've had a long period of time where the stock market has been moving higher to the point where it's overvalued. And this run that we've had since 2009, it bottomed out in, I believe, April 2009 or March 2009. The run that we've had is one of the longest ones we've ever had. And not only that, uninterrupted by any kind of meaningful correction. And granted, I think we have to admit it was extreme Federal Reserve and government intervention that triggered this run in the stock market, and that's not a fundamental factor over the long run that's going to drive stock market valuations, because at some point the intervention doesn't work anymore.
Right. Well, I love the way you put that, and I completely agree with you. And this analysis as to what they're doing with GAAP is really interesting because it's another trick up their sleeve of basically injections, artificial injections of stimulus into the economy, other than just simply printing money or low interest rates, other ways to make things appear rosy. And that's exactly what they're doing here with the PE ratio. And we know, we could talk about the unemployment rate, CPI, all these things that they've manipulated over the years to just keep a handle on perception. And speaking of perception and keeping a handle on things, let's talk about cashless society and where we are seeing this going. And, again, it's all about perception. It's all about control and not allowing things to get out of control. Dave, what are your thoughts on this and where are we headed?
I go to bed every night that I think about it, and I try not to think about it every night, but I go to bed often, praying that we don't go to a cashless society, because I think it's probably, it's not, the changes won't hit right away, and that, those types of changes don't ever hit right away, and they'll try and phase them in slowly over time so that people don't really notice the changes. But I mean, it's clearly a move by governments to get more control over the population and more control over our lives. And to me, I've just felt that there's been a long-term movement toward totalitarianism in the Western democracies, and we're seeing that in all kinds of ways. Obamacare is a good example of it, nationalized health insurance. And I think that the cashless, moving to a digital currency system is another big step in that direction. I don't think anything good can come from that.
Sure. Well, talking about cash and getting out of the system, super popular right now is Bitcoin, and it's actually pulled down now. Last I checked, it was about $770 in the last trade, but still significantly higher than it has been in a very long time, and really an example of what happens in an unmanipulated free market. And that's as opposed to what we've seen in gold and silver, unfortunately. But let's get your thoughts here. What about Bitcoin? What are your thoughts on Bitcoin?
I've never really been a big fan of the Bitcoin. It's dependent on a computer system. So, right there, you've introduced counterparty risk to the currency, right? I mean, a fiat currency is not a good form of money because it's really someone else's counterparty risk, right? So obviously the U.S. dollar is it says it's a note, it's a Federal Reserve note, so it's dependent on what someone else says the value is, right?
Well, Dave, if I can jump in right there, what people have said, I've spoken to experts here at Crush the Street, and the counterparty risk you're talking about is the network. And the more people that are using Bitcoin and trading with it and have it on their computers and have connected that network, I mean, the stronger it is. It would really just take an absolute takedown of that network, which I don't even know how would happen because I'm not a complete expert on this, but that's where they say, like a guy like Trace Merritt says, there is no counterparty risk with Bitcoin. And you're right, it is fiat to the sense that it's not backed by anything, but it's limited and people value it.
I agree. It obviously has value. And I think the intent behind Bitcoin is really admirable. But to say it doesn't have counterparty risk, if you recall, like within Obama's first year, he started talking about the Oval Office, the executive branch of government, having a kill switch to the internet. So what do you do if you've got some of your wealth tied up in Bitcoin and you're in this country and they invoke and the government invokes a national security crisis measures, and they said part of it is we got to kill the internet. What are you going to do?
Sure.
That's my thing there with the Bitcoin. It does have counterparty risk that all they got to do is shut down the internet, and we could be headed into a situation where the government is given that power anyway because of all this fake news crap going on and Russian hacking thing. To me, what that has written all over it is the government's looking for a reason to implement legislation that lets them have more control over the internet.
Well, I totally see where you're going with that, and obviously making laws out there to discourage Bitcoin use. Obviously, a lot of the growth we've seen is because of companies like Expedia, Overstock, Newegg, and these other legitimate businesses accepting it. But all of a sudden, if the government just creates a law that says, hey, you can't do that anymore, it will be completely dependent on a black market, which still could take off too. But it would definitely hinder the growth, at least in the short term.
Right. Here's a good contrast example. So, obviously I'm a gold and silver guy, and until someone comes up with an alternative that makes more sense and seems to work better, I think gold is your ultimate currency, and it has been for, thousands and thousands of years. So let's say that you're like, okay, well, I'm not sure about Bitcoin. I'm just going to when I have extra money, I'm going to buy gold and silver and keep it locked up in my house. Okay? And you're in a situation, you have possession of it. You're in a situation where the government says, okay, we're going to outlaw gold and silver. Well, at least you still have the gold and silver in your possession, and it's going to have value. Whether it's black market value or whether, you decide, okay, I've had enough of this, I'm leaving the country. Your gold and silver is going to have value somewhere in the world. If you've got money sitting in Bitcoin and the government says, we don't like this because it doesn't give us control over our digital currency system, we're going to shut down access to Bitcoin, then what do you do? If you can't access your Bitcoin money through the computer, what do you do? I don't know. I don't know the answer to that. Maybe there is. I don't know, though.
Yeah. Well, I mean, I know you can store your private keys offline and things like that. But I mean, I truly don't know the extent of the real threat that Bitcoin has, other than, what it's doing now and why it's growing. So, but Dave, let's just get your ultimate thoughts here with precious metals and the junior mining companies. In 2017, we're seeing a resurgence, another growth opportunity, people getting excited about precious metals going into 2017 again, after we've had quite the downtrend from the summer of 2016. So, what are your initial thoughts on that?
Well, first of all, in terms of what happened from August until now in gold and silver and the mining stocks, I mean, we had a phenomenal run from the beginning of 2016 on, and actually gold and silver bottomed in price in mid-December of 2015. So, we had on a percentage basis, we had a phenomenal run. And even, I mean, you can always make the argument that gold and silver have been suppressed artificially for so long that they could go straight up for a year every day and they'd still be undervalued. And that's the case, but that's not the trading realities of the marketplace. So, so for instance, the Huey Amex Gold Bugs Index hit 100 or just a little over 100. Actually, intraday it went a little below 100 in mid-January of 2016, and then it closed at a little over 100 that day, and then it ran up to 284. That's 184% gain in like 8 months.
Right.
And anyone who expects more than that, or even expects that, I think is the proverbial hog in the marketplace. So to me, it was technically, and again, that means over a shorter term basis, technically the market was overbought. It was overextended. There was a lot of frothiness in it, and I saw it in some of my subscriber base, where guys would call, or not call me, but email me and say, hey, when's, great call with Almadex, where's the next one that's going to go up 600%? And I'd be like, what? 600%, I hope I can pick out one of those every 5 years. So I guess, the market got frothy, and we
Sure.
also saw that in the futures open interest, which, a good part of that is also part of the manipulation scheme that goes on. But I think, well, first of all, and I've been meaning to look into this, and I just haven't had the time to do it. I don't think you get a move like we had in a market in 2016 with the precious metals sector that's not followed up with another move higher. And I'd have to research that, and I don't know if I'll have time to really make that statement official. But it just kind of feels to me like the market felt in 2002, 2003, and then we had some pretty violent pullbacks between 2002 and March of 2008, when that there was a intermediate term top in the sector in late that spring. So I kind of liken what happened this past summer to what happened in the summer of 2008. So
Right.
I think the market is headed higher, and I think we're going to see a higher high. Like the Huey's going to go over 284. I don't know if it'll happen as quickly as it did last year. It could, but I don't know.
Right.
Again, I think a lot of it's going to depend on how long Trump can keep this let's call it the so-called Trump rally. It depends on how long people are going to be fascinated with the stock market, and once they lose their fascination with that, I think we're going to see a big renewed push into the precious metal sector.
Right. Well, I'm looking at the Huey right now, and compared to last year, this time when it was at 100, I mean, we're about at 200 now, just under it. So still spectacular,
Exactly.
Yeah. So, I mean, exactly what you're saying. And over the longer term period, we could see this thing go substantially higher, and this will just look like a correction on a long-term chart. So, right. Dave, and I just want to get your, final thoughts here with silver. Is silver going to be the trade to be in 2017, considering Trump, the double edge inflation aspect and the industrial demand component that might come from the plans that Trump has for the economy?
I don't think those plans are going to get off the ground. I just don't think he's going to be able to finance it. And if he does, there's going to be a huge sell-off if he attempts it, there's going to be a huge sell-off in the bond market. I think silver, I think in my view and the way I look at silver, it's first and foremost a monetary metal, and the industrial component is kind of call it the equity kicker, that gives it an extra boost in value over gold. But the silver market is, and I don't remember the exact numbers, but it's a fraction of the size of the gold market, and it's easier to push it down, it's easier to push it higher. And I think part of what we saw last year in the precious metal sector was an acknowledgement that the precious metals are a legitimate safe store of wealth, and as that trend continues, I think, and especially with people who can't afford to buy an ounce of gold, you go out and you buy a roll of silver eagles for a fraction of the cost that it would take to buy an ounce of gold. So, a third of the cost basically. And that, to me, that's the poor man's gold effect that silver has. You get, the wealthy guys go and they accumulate gold, and the middle class guys like us, we go and accumulate silver. In fact, I'm getting ready to buy some more silver this week. So I do think that, and again, I could be wrong about, the bull market and the precious metals being renewed, but on the assumption that we are, I think silver is going to really outperform gold going forward over the next several years. So, I mean, we're at about, and I haven't calculated it recently, but in the last few days, but I think we're around 75 on the gold silver ratio.
Yeah, something like that. I know.
It got down to the low 30s, right before the market fell off a cliff in 2011. That gold silver ratio touched in the low 30s, and I think we're going to see it go even lower than that this time. So,
something to notice too is that many of the other commodities are also taking off. I mean, we've seen that in oil and zinc, copper, lead, even uranium. This last week, we're seeing the uranium start to move, which has been in a long-term bear market. And the story is still yet to be told for uranium, but that's also lends some credibility to the fact that we are in a confirmed bull market in the commodities.
Yeah, and to the extent that those metals, the industrial metals, to the extent that their rally continues, I think that's the inflation story coming in. I don't know that it's necessarily the GDP story, because if the move we've seen in copper, et cetera, was correlated with the Trump rally in the Dow and the S&P, then I don't think it's going to be long-lived, because again, I don't think Trump's going to be able to put in place these massive spending plans that he has. I just don't think and especially if he's going to cut taxes the way he says he's going to cut them, he's not going to be able to finance it. So I do think that, I do agree, and thank you for bringing up this idea of inflation, because I had read an article yesterday that talked about, we're going to start seeing China, they were exporting deflation to this country for a couple decades, and now I think we're going to start seeing them export inflation to this country because their costs are going up. So, and commodities have always been a really good inflation hedge. So that could be the component that's driving these commodity metals.
Well, great insight right there, everyone. Dave Kranzler of Investment Research Dynamics. And Dave, if people want to learn more about what you do and the two publications that you have, please share a little more about that.
Sure. My website is investmentresearchdynamics.com, and I try to put at least one blog post a day there. It's but I try not to just write something just to write a blog post. So I try to, if I don't have anything meaningful to say, or I'm not agitated by something, I might go a day without posting something, or a couple days, or whatnot. But the Short Sellers Journal is a weekly publication, and I include some insight and research and commentary about the market in general that I don't think you find, in the general blogosphere out there. And I always try to come up with data that might not show up on places like Zero Hedge. And then I try and I always am going to have at least one short idea, one stock idea to short in there. But some issues, the ideas flow, and I'll have 4 or 5 ideas. And for instance, the latest issue, I had 2 ideas, kind of a primary idea plus I re-recommended an idea that worked last year on a short-term basis. So, and that's the Short Sellers Journal. And then the Mining Stock Journal, I kind of follow the same format. I lead off with commentary and what I think is my unique, maybe not accurate or correct, but at least unique insight on the precious metals market. And I have a lot of data sources that I draw from, some of which are not in the mainstream blogosphere. And then I'm going to change the format a little bit. I had been trying to produce a new idea every 2 weeks, and at a point, it's the law of diminishing marginal returns kicks in. You run out of good ideas, and I don't want to run out of good ideas, but I'm going to start spending more time rehashing the ideas that I've already presented and updating those with news. In fact, I'm trying to get a hold of a CEO today to go over what's going on at his company since I last presented it. So I'm probably going to try and have one idea I publish it every 2 weeks, I'm going to try and have one good idea a month if I can. And I also might start I've been focusing on the juniors in the Mining Stock Journal. I might start coming up with some larger cap ideas, some less risky ideas, because those stocks that part of the mining stock sector has been, has had the crap beaten out of it. So there's some ideas out there that I think make a lot of sense, although they might not give you the same type of bang that a junior that really hits will give you.
Sure. Well, everyone, Dave Kranzler. Dave, sounds like a lot of exciting things on the horizon. Thanks for coming on the show with me today.
Thanks for having me, Kenneth. I really appreciate it. Enjoyed chatting with you.